Welcome to the Alex Trade channel. Today, I'm going to share how I managed to start making a profit in trading, and what I would advise myself if I could go back to the very beginning of my journey. If you have ever tried trading real markets, binary option stocks, or cryptocurrencies, you should know that it can be difficult. On the one hand, the internet is full of stories about instant money. On the other hand, reality turns out to be much more complicated. In this episode, I will share my first mistakes, the lessons that helped me not to give up, and most importantly, the strategic and psychological techniques that allowed me to achieve stable profits. Let's not waste time, stock up on tea or coffee, because you are in for a detailed and honest story about trading without embellishment. I hope that my experience and advice will save you from a number of mistakes and give you confidence in your own abilities. Don't listen to those who say that making money in trading is impossible. Try it yourself. In my Telegram channel you will find knowledge that will help you get into the black, and that's not all. I have a free gift that you can get right now. Just message me directly, subscribe to my YouTube channel, give a like, and start earning. All the links are in the description. Let's start, as usual, with trading. Let's go! Let's start trading with the Australian dollar and Swiss franc currency pair. We can see that the price is actively dropping, and this is a great opportunity to make some money. Let's mark the previous lows to better understand the price movement, and also change the time frame to find the nearest significant market that the price is heading towards. The situation looks promising. The price still has potential to drop, so we're only going to work on the downside. Moreover, the indicator is already in the oversold zone, but after the correction, we can open another position. Let's head over to the trading terminal and open a short position with a volume of $500. When I first started, my motivation was very simple. I wanted to make money, preferably quickly and a lot. There were plenty of stories about how someone multiplied their capital tenfold in just a couple of weeks. It seemed like trading was some kind of magic pill. I was watching videos on YouTube, reading articles, and thinking, yeah, I can do that too. I opened my first brokerage account, almost without any preparation. I deposited a small amount, but to be honest, I was still risking more than it was worth. My first trades were often intuitive. I would buy when I thought the price was ready to go up, and I would sell when panic started to set in. As a result, in the first month I got a number of small wins and already thought, wow, this is so easy. But literally a week later the market went down. It went against me, and I lost almost half of my deposit. It became clear that my luck was accidental. After that, I focused on self-education. I tried to understand the basics of technical analysis, read about fundamental factors, studied indicators, but I did it chaotically, without a system, grabbing onto one strategy and then another. If someone asked me right now, what would you tell yourself at the start? I would answer, choose one trading model, one instrument, and study it thoroughly. Don't try to cover everything at once. That will just create confusion. Another thing I didn't understand back then was the importance of psychology. When you look at a chart, your biggest enemy is not the market, but your own fear and greed. If the price suddenly goes in a different direction than you expected, your hands are drawn to open another position. Even when the objective reasons say, wait, this could be a temporary correction. If I could give advice to my beginner self, I would say calmness and discipline are the keys to success. Don't let emotions drive your decisions. Use clearly defined rules for entering trades. In the meantime, our position is closing in the green, and we're making a profit of $410. Great result. Everything happened just as we expected. After the correction, the price continued to drop and is moving towards the support level. However, since the indicator is already in the oversold zone, we won't be trading here any further. And let's move on to the next currency pair. The next currency pair is the Canadian dollar and the Japanese yen. Here, the price is also actively dropping. There were some minor corrections, but the downward movement is still intact, which is a good signal for us. So here, we will also open a short position. Moreover, it's clear that the price has already broken through the support level and set a new low. This means that there's nothing holding it up from below. It's a strong signal that trading here is definitely all about going short. Let's head over to the trading terminal and open a short position with a volume of $500. I've made quite a few mistakes. I want to highlight a few of the most painful ones that left a deep mark on my memory and my wallet. The first one, chasing after excessive profits. I was trying to double or triple my deposit in just a few weeks. Naturally, I was placing very large volumes. And as soon as the market went against me, I would instantly rack up serious losses. I have to admit, back then, I thought risk management was just a poor man's fear. In reality, this is the foundation of any long-term success. The second one, lack of a trading system. I was changing strategies literally every day. I saw a video about scalping. When scalping, heard about candlestick patterns, dropped everything and started looking for reversal patterns. As a result, I didn't really master any method properly. It's important to pick one thing, test it out, and see if it works for you, instead of jumping from one idea to another. Third, excessive emotionality. If I had a series of losing trades, I would start to panic and want to win back as quickly as possible, increasing the risk again. Or, on the contrary, after one or two profitable trades, I began to feel invincible, and the Forest Bank both extremes great losses balance. And composure, that's what is needed. Trader. 4. Blind faith in the guru. I, like many newbies, bought all sorts of secret courses that promised mountains of gold. Yes, some courses have some good ideas, but most are just selling the illusion of quick success. It's better to invest in your own understanding of the market by honing your skills and developing analytical thinking. All these mistakes taught me the main thing. The market does not forgive carelessness and pride. Every time I thought I was smart enough, I was taught a painful lesson. But gradually I realized that any losses are part of learning. If you analyze properly why a trade went wrong, you can avoid making the same mistakes next time. In the meantime, our position is closing in the green and bringing us a profit of $455. Great result. However, despite the profit, the price didn't drop as much as I would have liked. The volumes are already drying up, so we're wrapping up trading on this currency pair and moving on to the next one. The next currency pair is the Canadian dollar and the Swiss franc. The price has been showing a strong decline for quite some time now. Switching to the 15-minute time frame, and we mark the previous lows. These are key levels where the price might reverse or at least slow down its decline. We're back on the 1-minute time frame and see that the price has hit the oversold zone and is close to reversing. Plus, a reversal pattern is forming on the chart, which gives us a good opportunity to enter a buy trade. Let's head over to the trading terminal and open a buy position with a volume of $500. It took me a few months to go from losses to consistent profits. It didn't happen overnight, and I can't say that everything became perfect. But the system and principles emerged that really work. First, creating a clear trading plan. I realized that you can't just buy and sell. You need to have clear entry conditions. For example, a signal from an indicator confirmed by a candlestick pattern. When you have a clear plan, decisions are made based on rules, not emotions. Secondly, strict risk management. I set myself a rule not to risk more than 1 or 2% of the deposit in one transaction. At first it seemed like a small amount of money, but in the end stability turned out to be more important than high rates. So I stopped being afraid that one bad trade would wipe out all my past successes. 3. Vision of a trader's diary. For several months I wrote down every trade. Why did I enter the cap? At what level? What was happening with the market? At the moment when the position was closed. Then once a week I analyzed which setups were unprofitable and which were the most profitable. This way, I noticed patterns and figured out which strategies suited my style. Fourth, combining technical and fundamental analysis. Before, I only looked at the charts, but the market doesn't move in a vacuum. Important news, company reports, economic indicators. All of this can affect the price. I started taking the fundamental background into account so I wouldn't find myself in situations where sudden news completely disrupts my technical analysis. Fifth, working on psychology and discipline. No matter how powerful the indicators are, they won't help if you can't control your emotions. I have read several books on psychology, trading. I started taking breaks during the trading session. I learned to stop myself when my hands reach for averaging down on a losing position without a good reason. All these points created a solid foundation. Yeah, even with that, I still have losing trades. But the main difference is that the overall curve of my capital is going up. I went out and continue to go out. Plus, it's all thanks to a systematic approach, not just random luck. In the meantime, our position is closing in the green, bringing us a profit of $455. The price has gone up significantly, and we got into this trade on this currency pair at a great time. However, the market might go sideways from here, so we're wrapping up trading here and moving on to the next currency pair. The next currency pair is the euro-dollar. Here we have a good support level and a bit of resistance that has already been broken, and this level coincides with a round number. You can also see on the chart that the price has broken the local downtrend, which could indicate further declines. In addition, there's a small support level that should also be taken into account in the analysis. We're back in the trading terminal, selecting the euro and US dollar currency pair and opening a short position. If I could go back in time and tell myself something, I would put it this way. First, learn the basic principles. Don't rush into the market without understanding how trends, support and resistance levels, fundamental and technical factors work. Without a solid foundation, you'll be as blind as a kitten. Second, protect your deposit and don't dive into high risks. The race for super profits is a sure path to failure. First, learn to consistently make small but regular profits, and then you can scale up. Third, keep track of your stats and analyze them, without numbers and facts. You don't understand why you make money on some trades and lose on others. Regularly reviewing your own trades is the best school. Fourth, learn to control your emotions. Trading is not a casino. Any panic or euphoria works against you. Develop a clear action plan for yourself and stick to it, especially in stressful situations. Fifth, don't forget about the long term. Maybe quick money does happen. For some, sure. But for most traders, the key to success is the gradual growth of skills and capital. Don't compare yourself to those stories of millionaires made in a month. Each of these tips would have saved me a ton of money and nerves if I had heard them right at the start. After all, every trader started with the first step, take it. Today, in my Telegram channel, I share valuable knowledge and strategies that work. And to get you started even faster, I have a free gift. Just write me a private message, subscribe to my YouTube, like it and start earning now. All the links are in the description. In the meantime, our position is closing in the green, bringing us a profit of $450. The price, confidently, went down, which gave us a great result. That's exactly what we were expecting. Moreover, you can see that the movement continues on increased volumes, which confirms the strength of the trend. However, to diversify our trading, we're switching to another currency pair. The next currency pair is the British pound and the Swiss franc. Let's mark the local level that has already been broken. And now we switch to the 15-minute time frame. Here we can see a cluster of previous lows. Let's mark them for clarity, and then we'll go back to the 1-minute time frame. As you can see, the previous low is really close to. There's also a good volume present. This gives us a great opportunity to open a short position. Let's head to the trading terminal and open a short position with a volume of $500. Let's talk about what's happening in the trading terminal. About motivation. Sometimes, when everything is going wrong, you just want to quit trading and say, "This isn't for me." I too have gone through periods where I felt like the market hated me and was deliberately going against my trades. But over time I realized that failure is part of the path to success. Without them, it's almost impossible to grow. If you're going through losing trades right now, don't lose hope. Analyze each one and understand where exactly you made a mistake. Perhaps you were in a hurry to enter or did not take into account important news. With each time, you become more experienced. Passion decreases and professionalism increases. Believe in yourself. All you need for success is persistence, common sense, and a disciplined approach. And, what's really important, always look at the long term. 1 or 2 failures don't define your career. It's quite possible that in a month or 6 months, you'll enter a phase where your deposit curve starts to grow steadily. Remember, trading is not just about making money, but also about self-development. You learn to act in uncertain conditions, make quick decisions, take responsibility for your actions, and analyze your mistakes. These skills will help you not just in trading, but in life. So don't be afraid, don't give up, and keep moving forward. In the meantime, our position is closing in the green, bringing us a profit of $430. Great result. The price confidently went down, as we planned. Moreover, it broke the previous low, which gives a high probability of further declines and new lows. That's all for today, folks. During this time, we managed to earn $2,200. That's really a great result. I hope my story and the advice I've shared will help you be more mindful in trading. If you're just starting out, remember that any mistakes can definitely be used as a springboard for personal growth, not as a reason for disappointment. If you liked this video, be sure to give it a thumbs up and subscribe to the channel so you don't miss any new episodes. It would be great if you could share your stories in the comments about the mistakes you've made and the lessons you've learned from them. Maybe your experience will be the deciding factor and motivation for someone to keep going. Freedom is when you manage your own time and money. Want to do the same? Subscribe to my Telegram channel, where I share working strategies and useful tips. And I also have a free gift. Message me privately. Thank you for being with me. All the links are in the description. Remember, making a profit isn't a miracle, it's the result of hard work, proper planning, and psychological resilience. See you soon in the next videos, where we'll continue to share experiences and break down the secrets of successful trading. I wish everyone stable profits and strong nerves.